Hello, traders. It is 8:01 a.m. Chicago time on Wednesday, the 31st of August, 2022. End of month today. End of month. Not a significant month, but still the end of month. Thanks for joining me today on episode number 2305. 2305. Pretty cool. Somebody somewhere, I forget where it was. I think it was a comment to one of my YouTube videos, linked a trader bite from August 30th, 2013. It's kind of funny going back, and I skimmed through it. It's kind of funny going back to the simplicity of it versus all the stuff that goes into it today. Anyway, thanks for joining me. Again, episode 2305. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. And Michael Bennett, you're on point with that comment about YouTube or U2, the band and the song. Still haven't found what I'm looking for. That's basically the market. The market, I don't think it's found what it's looking for. And at the same time, I don't think the market knows what it's looking for at this point. It just knows that me no likey Fed speak. That's basically where we are so far, and it's really not finding its traction. Although today across the board looks like a bit of a reversal day there. Anyway, I hope the sound is pretty good today. The overnight session pretty mixed. We do have a little bit of a spring in the step of the NASDAQ today, popping up almost 100 points or 75 basis points. But the overall posture of the market is mixed. Europe is lagging mainly because the EU CPI came out this morning. The inflation rate came out this morning, year-on-year flash for August at 9.1%. The prior's 8.9. The expectation's in line at 9.1. Even though it meets the expectation, it's still 9.1%. So it's still moving up from 8.9%. The inflation rate month-on-month flash for August came in at 0.5% versus 0.6, which sounds a little bit better, but actually the prior month was 0.1 versus 0.5. Current core inflation at 4.3% versus 4.1%. So all of that is pretty pretty rough. France inflation rate year on year preliminary for August comes in at 5.8% versus 6% expected, and the prior 6.1%. So they're moving in the right direction. And then we got GDP out of Canada. GDP out of Canada misses quite a bit here, 3.3%. This is the annualized GDP for Q2, 3.3% versus 5.3% expected. Growth rate Q on Q came in at 0.8% for Canada versus 1%. So there's a miss there. We do get Chicago PMI this morning. This used to be a mover lately. I don't think it has been. The Chicago PMI is a private number, comes out to the public at 9:45. And if you have, 15 or 20 grand laying around, you can subscribe to it and get it 3 minutes earlier at 9:42 Eastern. So to me, it just seems like it has not been significant. There are many more. There are other PMI numbers that the market seems to respond to. In either case, the Chicago PMI expecting 51. Then we get the crude oil inventories out of the EIA expecting a draw of 1.48 million on crude, and gasoline expects a draw of 1.17 million. Crude is coming off. It has bounced a fair amount, but crude went down pretty good this morning. Went as far as almost 88, down to $88 from about 92.5 or so. I don't have my quote board in front of me to see it. Actually, let me see if I can grab it. Crude high 92.73. Crude low 88.27. It's quite a range there for $4.50. recovering a little bit now. And that's where we stand this evening. Going forward, we do see the Cakesin manufacturing PMI for August at 945. This is a significant number, expecting 50 this evening. We do get Fed's Bostic in the afternoon after the market close. So that's that. No major reports, earnings, and we did get ADP this morning, and they rejiggered how they report that number. So I didn't pay much attention to it, neither did the market really. And so that's where that stands. Looking at the S&P is in a multi-distribution profile. The S&P actually is turning into a balanced profile. It looks like an inverted head and shoulder. 273,000 contracts traded. 273,000 contracts traded. 75% of the inventory is long because it's traded mostly above yesterday's close or settle. And the range is 39 points, well within the first standard deviation, so pretty normal. The S&P is pretty normal today. The point of control at 4,000, 4 Gs. And this will be your line in the sand today as we open, is the 4G mark, the millennial figure here. And it's likely to be a whipsawy type of trade, although the S&P is showing some signs of life on the buy side. Here's what we saw yesterday. The expectation was most likely a choppy open, a drop. I did expect it to bounce back up a little bit. Bad color. Where's my Jello? Expected some sort of a bounce higher for a more affirmative drop into, if you recall, and I kept saying it wrong, 39.90 and 39.80 is key levels below. Below that, it's 54, 39.54. So I was looking for a drop after a pop. Really was looking for some structure to that sell-off, and what it did. So we got scenario one in a way, broke the 1650 and pushed through, but it didn't have any buyers at all. Here's what we saw yesterday. This is what we saw yesterday right here. There we are. We opened up and we immediately went into this choppy sell-off kind of mode. And I didn't see, unless you came in prepared to sell whatever's in front of you, I didn't see a very good spot to get short this thing. Once it broke through yesterday's low, which didn't happen until it got down to 40.17 right in here. Once it got in here, it became obvious to me that it's not likely to recover the prior day's close and so on. There was no attempt to go back to close and settlement. It basically had an internal gap and a push away. It wasn't a drive. This isn't a drive. This is an open auction with a downward skew. The first opportunity really to get short, if I was in a scalpy mood, was once it broke down and we had this little spike down and return. The break of that and pullback is a sell signal for me against this consolidation with a very, very well-defined risk at 40, 32, 50, 40, 33, with a short at 40, 30. Good risk reward on that. Excuse me. And the idea here is we would target the 4005, the 05, the 00, the 90, and the 80, giving us, 3 points of risk with about 40 or 50 points of range giving us a massive R factor, and that's pretty much it. Other than that, we did consolidate down here. We formed a zipper. This will become our defense later for a pop above to sell a pop above the 4,000. We broke down, came back to the IB. Pretty good spot here, but which was much wasn't too difficult to sell, even though it popped through the 4,000 by a little bit. But it came back to the IB, and we have this. The most important thing is we have this backup right here, and then you had another opportunity to sell it right there. So overall, pretty continued choppy kind of trading. I think that overall the trade is structural in a way, and it is doing what we expect, but it does it in a very low vol, slow rotation type of environment. We have grind, 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 break with an impulse, grind, grind, grind. So the way I'm getting into this, just to get a little bit technical here, and this may be more than you want to hear, but the way I'm looking into this is, I have a stock zone here. I'm looking for consolidation zippers to trade to trade the reversal from. So it comes into a stock zone, it forms a zipper, doesn't actually accomplish this to way back here, forms a zipper, breaks through, and then I'm looking for the break. If I miss the break, I'm looking for the pullback to somewhere near that stock zone for a continuation, and that doesn't make for many opportunities. It's been a little bit tougher to read, and maybe that's just me. There's a lot going on right now on my side, and that may be the issue. But I'm finding that I'm trading a lot less, and I'm not seeing many opportunities to get good R factor type trades. The sell-off has taken place as expected. Remember, we went from the sell-off on Friday, very weak structure. So we opened way up here, and we closed way down here. We expect the sell-off to get its accompanying continuation move. So it's either going to do the continuation move the next day if there's still a catalyst, or it's going to have a consolidation day, ergo voila, and then get the continuation day after that. So to me, this was very clear, a very clear continuation given the way it opened, really short side only. If you're a Convergent member, I warned early on, caution longs. We're looking short only, and then we're looking for it to push into the 90 and the 80 down here, and it consolidated and held in the basically held value between 4,000 and 39.70 yesterday. And then this morning, it is trading a little bit higher. We're still the one-time framing is down. So we want to pay particular attention to yesterday's high. Today, we're not very close to it, but I'm expecting us to test the 1650 this morning, and I'm expecting us back at the 20. We are above yesterday's value. We are holding, the overnight session held a higher low. We didn't really challenge yesterday's lows. And to me, it looks like buyers may have had enough for now, and the shorts may start to cover, which means they become buyers, and buyers might start taking positions. And as described yesterday, as we find those buyers, it gives us pretty thin areas to get back into the key 40.75 to 41.75 balance. 41.75 balance. And that's the sweet spot. Look, we already knew what the Fed was going to say. The Fed said what we already knew what the Fed was going to say. The Fed is doing what we already knew the Fed said it would do. So that run up on July 27th was really excessive, it seemed, on the FOMC. Just seemed to make no sense whatsoever, but I'm not a macro analyst. I'm trading the price action. And then what we did yesterday is we moved back to that FOMC day. We moved back into the range, and now cooler heads are likely to prevail. And if cooler heads are likely to prevail, nothing has changed in the macro picture for the S&P 500. So I expect it back at 4122, 4122, and 4140, depending on where you pull balance from. So today I'm looking for it to push higher, to revisit, and it may check out yesterday's high in the RTH in the 40s. What was yesterday's high exactly? 46.50. So we're looking for this one-time framing to potentially be challenged. Not likely today. I'm expecting an open auction in range today. I'm expecting it to have an upward skew. I'm expecting 1650 and 20. I mean, we're pretty close. We've pushed to 4013. I was chatting with our ES Maven, John, at the Convergence Trading chat, and I was saying, hey, man, this does look like it's setting up for 1650 and 20. Back then, it was underneath the 4,000. And it's already pushed to about 13. So it doesn't have very much to get to 1650 and 20. And if it does, you are now getting inside of this balance range here. And we are leaving the bulk of value from yesterday and moving into this thin structure, the selling tail that was put in yesterday. And it makes it very easy to squeeze those late shorts and get more to the upside. So I am going to sit on my hands for the first 15 minutes or so, and if I see that the sell side is weak, then I would look for a long, look to lean against a well-defined area, and I'm going to look for that 20 and then potentially a push into the 40s today, which is not that much range. I mean, if it pulls back to 4,000 and goes to 40, that's just 40 points. We're expecting somewhere. The mode now is around 52 points. The one standard deviation, I could tell you from our summary sheet, the one standard deviation of range is 78. So well within range to get that high from yesterday tagged and the high from the day before that tagged as well, the Monday high, the balance high tagged as well. So, 40, 60 something is well within range. Again, I'm coming in here and I do have a bullish lean, but I'm having a bullish lean because of the price action and the way the auction has progressed. We've remained the entire overnight session. We've remained above the prior settle, which is 39.8750, and above the prior point of control at 39.86. or so. We've remained above there. Those are well below us. Those become a floor now. And the fact that we have sold off so strongly on Friday and followed through yesterday is likely to show some weak hands and a continued push up as, options traders cover, shorts on equities cover, and so on and so forth. I hope that makes sense. Let's take a look at the delta so far. The delta, remember how I've said that the very large lots have been asleep? Do you all remember? For the last couple of sessions, I'm like, very large lots just sleeping. Very, very complacent. They're not today. So the yellow line is very large lots. These are 100 lot orders crossing the tape. And you could see that they're quite active. And you can also see that the cumulative delta or the overall delta is following that large lot. To me, this is a further indication that a higher time frame is likely in control today and is likely to drive prices higher. Don't read too much into delta. It can be deceiving. But to me, the small lots are not getting much help. The delta is up above the zero line. And it's just looking like it's setting up to squeeze to the upside. We remain above settlement and then, everything else that I said to support that argument. However, if it doesn't hold, it creates an incredibly good risk reward opportunity to get short. So don't forget and don't get complacent with the idea that, yeah, we expect it to do one thing, but if it doesn't, then we can trade the other side as well, and the chances are it would likely be better. So here's yesterday's balance. Okay, that pink line is yesterday's point of control. We have a market that is sitting on top of full session. It's just above full session VWAP, full session mid, and the overnight point of control. We have a market that's now in balance, and it's got a higher skew. We have a higher low. Open auction. I'm expecting P settle to be tagged. I'm expecting it to try to get down. What the hell am I talking about? Sorry about that. These charts look the same. I didn't notice the. Hang on. I'm switching to extended. Sorry about that. These charts look the same. Until I looked at the price scale, I was like, nope, we're not in the 1800s. That's the Russell. So let me reload that. Same concept, by the way. This can be applied across the Russell, NASDAQ, Dow, EMD, whatever, FANG. Let's let this load. I was not prepared. I was looking at the Russell this morning to help our Russell Maven, and left the chart as it is. So I'm waiting for it to load. Sorry about this. Actually, let's do this in the active chart. Let's do this in the active chart, since we don't have that much range. Here's your full session VWAP. You're going to hear me say the same stuff again. Full session VWAP, full session mid. Full session VWAP, full session mid. The overnight point of control is sitting right here at 4,000, all within this range. Same idea as with the Russell. We've got a low, higher low overnight. We've got balance all the way through here. We've got a thin tail up here. The idea is the same. Open auction that makes an attempt at the 4,000, and then below the 4,000, and then I expect bids to come in and be firm, and I expect them to take out the overnight high, which is currently at 18.25, I guess, and then to start moving above the 40.20 and to move through the thin part of yesterday's range. I'm expecting a bounce today. So we had the impulse day down Friday, we had the balance day Monday, we had the continuation day yesterday. This is likely to be the corrective day, so I'm expecting this thing to push through. Again, 46 becomes the one-time framing down, the end of one-time framing down, 46.50. 46.50, and that becomes the key target. This is the area that buyers will have to push through in order to get more follow-through. The secondary scenario is an open auction that immediately pushes higher, fails to get anywhere, and then impulses down, consolidates at the open, and then it starts to give in. As soon as it gives up the overnight low, this low yesterday is probably toast. In that situation, I'm looking for 39.54 as the next target. So this is a situation where the buyers are just not able to carry price and are not able to respond. Sellers are still strong. We don't know that yet. Sellers are still strong, and it's likely to push to the next key area, which is 39.54. Really 39.60, 39.54. Okay? So those are the two main ideas for today. I want to remind you before you go, today I'll be on a show, on the Futures Radio show with Anthony Crudelli and with Scott Andrews of InvestiQuant. We'll be talking about man versus machine trading the S&P 500 automatically or algorithmically, pros and cons, and all of that stuff. So make sure you sign up at edgeclear.com/deli. There's a giveaway that ends at 11 a.m. Eastern, 11 a.m. Eastern. giveaways, 3 drones. But do attend. I think it's really important to know what someone like Scott, who is in the business of trading algorithmically, how he's thinking and how those sorts of programs work. I think there's a lot to be learned there. Good luck, and I'll catch you. I'll catch you at 12 o'clock. 12 o'clock Eastern. We'll be on the show. Take care.